Nakita niyo yun?
Oo. Saan siya naka-connect?
Being live stream na agad?
Yeah, kikita ko na.
Saan?
Sa group. And then sa page natin. Yeah, perfect. Ops to.
Isang click lang pala yun.
That's good. Hello sa aming mga viewers. Ni-live pala ni Miss Joy, ah. Hello sa...
Ito mo, look.
Hello. Hi, everyone. We'll start in 5 minutes.
Yeah, I already got that. Yeah, I'll be here for
We will be kicking off in around 2 minutes.
Ay, congratulations pala to TaxSmart for that new award, those 2 new awards. Sa Victoria Wide yan, no?
Yes, Alvin. Entire Victoria.
Paki-explain nga po. Ano po yung award na yan?
Yeah, we'll go to that in a bit. Do you want to go? You want to discuss, Rom?
No. Sa ano lang, during our presentation siguro.
Okay.
I-touch natin konti.
Cool. Should we check
Okay,
if
let's, I
Are
think we can start.
English mode, is it?
Raise your hand if you cannot understand. I think good afternoon mga idols daw, sabi.
Thanks, Jay.
Yeah. I think we can start actually. Join now. Let's start.
Okay. Afternoon or evening. It's actually evening. Evening, everyone. Welcome to TaxSmart Cafe's Unpacking Self-Managed Super Fun or SMSF event. Cool. So we will kick off. What we have in store today would be initially we'll go through why people set up SMSF. and then give you a bit of an overview of what SMSF really is. Right? We've been hearing self-managed super fund a lot, but it's good to also understand what it is. What are the advantages? What are the steps to set it up? Compliance. So there's a reason why it is called self-managed super fund. So we'll learn a lot about that, and also favorite investment of like Filipinos and those who have set up SMSF is property. So we'll touch a bit on that one as well. And lastly would be the 10 mistakes to avoid when setting up SMSF. Just a bit of housekeeping. So everyone should be on mute, I think. We'll see as we go along. But please be on mute so that everyone can hear what Rom and myself will be discussing throughout the event. Feel free to turn on your cameras. Every now and then I'll be taking a picture and then we'll post it afterwards. You can, like Jace, what Jace has done there. If you have any questions, please do type them in the chat and we'll allocate time. We have allocated time at the end of the event to go through your questions. This is also being live streamed right now on Facebook and in YouTube. So just to give everyone a heads up, we will try as much as we can to finish on time. And then after the event, we'll be sending out a survey. So we'll be very happy if you could respond to that survey so we'll know how you feel about the event and where we can improve on. If you have any questions, you can call us, you can email us, you can message us on the website and on Facebook as well. Cool. So just before we kick off, TaxSmart Cafe as a brand is quite new. So we started last year, January, but Care Financial Services and Accounting, CFSA, has been in the financial industry in Australia for around 6 to 7 years already. So it's not really new. It's just we separated out TaxSmart Cafe as a brand, as an accounting arm of CFSA. So it's so we need to be licensed in this industry. So we're a licensed accountant, registered tax agent, and through CFSA, we're also licensed financial advisor. That's why we can run this event for you right now for SMSF, which Rom will tackle a little bit more. We are members of IPA, Institute of Public Accountants, NTAA as well. Rom is an accredited SMSF Association Specialist. Well, today is a licensee, Rom's licensee for as a financial advisor. We are an Australian Accounting Awards finalist in 2022. And Alvin was mentioning something earlier, but we'll touch on a little bit about that, about another award that we just recently knew that we got. Rom is doing Entrepreneurs Essential course with Wharton, and I've just finished mine with Harvard. I'm just waiting for my certificate. Who we are not. So we won't be selling you any products or services as part of this event or afterwards, except potentially you'll receive every now and then some communications from us about our events and about our programs. And what we always say is do not trust anyone with your hard-earned money because it's yours, right? You work hard for that. It's for your family's future, for your future. So do not trust anyone with that. We will not call you after the event to convince you. Instead, if you already have accountants that you work with right now, we strongly advise you to go back to them, speak with them about the things you learned about during this event. Of course, we're happy to help you, assist you if you have any questions and you want to speak with us as well. We do not claim expertise for which we are not. So we're accountants. We are not real estate or property agents. We do work with them every now and then. So especially those that we work closely, if you need any assistance or support, we could refer you to them. Some we accept commissions, some we don't, and there are good reasons for those. Ram, you wanna go through the next slides?
Thanks, Joy. Since 2016, SMSF is highly regulated. This is considered as a financial product now. Before 2016, a lot of property spookers are approaching accountant because accountant knows your information. via our ATO portal, including the balance of your superannuation. So some property seller partnered with accountant, give an accountant a big amount of commission, and then accountant will set up your SMSF from 100 tax return. You will ended up paying an accountant 2,000 ongoing fees because of your SMSF. So on top of that, commissions coming from the property seller. So 2016, according to ASIC, accountants must be licensed to discuss an SMSF. So Joy mentioned a while ago our AFSL number. So we're actually licensed to discuss an SF. So if it's an accountant running a seminar about self-managed super fund, it's better to ask if they are licensed. Normally they run it with the property sellers. And it's nice to know that from 2016, accountant must be licensed, or they must have AFSL to recommend you to establish an SMSF. So if accountant starts to convince you to set up an SMSF, there might be a reason why he is recommending an SMSF, especially if they don't have a license. Accountant must be licensed as well. I'm looking into the right side as though the accountant must be licensed if they are comparing the performance of funds. For example, they are comparing the SMSF versus Australian Super. Because accountants supposed to be, that's the job of a financial advisor. Accountant must be licensed if he is recommending to consolidate your superannuation assets into a single fund, meaning if an accountant is recommending to consolidate your HESTA or Australian Super and set up an SMSF to combine that, is supposed to be licensed to do that. Next one, accountant without a license cannot prepare an investment strategy or discuss about investment. Accountant must be licensed as well if he's recommending a type of investment inside your SMSF, meaning he cannot discuss at all an investment without having a license. Cannot discuss a binding death benefit nomination. Cannot recommend to increase your contribution to super fund. He's supposed to be licensed if he is recommending to make an additional contribution like concessional and non-concessional contribution. Accountant cannot recommend without a license pension or recommend a transition to retirement pension. And this is the last one because this is actually accountants are actually receiving a big amount of commissions even without a license. So accountant without a license cannot recommend their client to purchase any form of property through their SMSF. So be careful working with professionals without a license. So Joy.
Yep, sorry, too many buttons to click. Okay, so as I mentioned earlier, so Rom is an SMSF SMSF specialist advisor. So actually, they said there are only a few Filipinos who are. As Rom highlighted, it's good to make sure that whoever you're speaking with is actually have the appropriate license to be a specialist advisor for SMSF. So as mentioned in the slide, any accountant who wish to be able to recommend to a client to establish, to set up, or to close down or wind up an interest in an SMSF must have the appropriate license. Cool. Okay, there you go. Before we go through the rest of the event, the presentation, general advice warning that so we are going to touch on at a high level what SMSF is about, the compliance, any responsibilities of directors as well, and any mistakes that people typically do when they set up SMSF. But this is more general advice. So we are not taking into consideration any specific circumstances that you have. So we will, as I said earlier, we'll have time to answer questions. But if they get too personal or specific to your circumstance, we would recommend you either go back to the professionals you work with, or happy for you to speak with us if you have any questions. Cool. The first section is why people actually set up SMSF. Why is it quite popular? Some statistics before we discuss further. Around 600,000 SMSFs in Australia has been set up. That was around a year back. So definitely there are a lot more than that. 25,000 new SMSF has been established in just a span of a year, right? So it's picking up. Nearly 600,000 SMSFs, combined total of 1.1 million members. And this is big, right? 822 billion in assets, quite significant number. Well, that's around 25% of the 3.3 trillion that's overall invested in superannuation. So it's becoming a lot popular. And also, I guess the reason why a number of people signed up for this event, right? Because a number of you have been hearing a lot about SMSF, quite keen to learn more about it. Okay, so 4 key reasons why people set up or want to set up SMSF. First is control. So it's like you want to be in the driver's seat of your retirement, right? So you want to be able to control where, I guess, your destiny for retirement. Or you have family, you have friends, you have colleagues who told you that they move their I guess their superannuation, their money from the superannuation money that they have into SMSF. That's why you got interested. Or you have financial experts that you trust with to be able to manage your fund. But again, as Rom will discuss later on, you as the directors of the SMSF, you will still be responsible for that, even though you work with other professionals. So take note of that. So I guess the last point there is, if you set up SMSF, are you going to be making the decisions on your own only? Or will you be requiring the assistance of advisors? But of course, if you do that, you might need to consider the costs as well, because there could be costs in doing so. Some would want to set up SMSF because they're quite dissatisfied with their current superannuation or APRA fund. So because most of the SMSF would sometimes be invested in stocks. So we've heard just recently, I guess just this Monday, right? So around 2%, I guess the fall in Australian stock market because of what happened in the US and in the UK, the UK pound, right? So it's very, I guess, fluid. And then the negative news that we hear a lot about the share market, where most of the APRA superannuation funds are invested. And then inflation right now in Australia, that's 6.1%. While some superannuation APRA funds would only return around 1 to 2% in the past year, because the past years have been quite tough. And some would even be a negative, right? So in Filipino terms, kakainin lang. So parang wala lang yung increase rate, yung return rate of APRA superannuation funds as compared to the inflation rate. That leads to the potential fear of not having enough for retirement, the perceived high fees as well. So just think about this. APRA superannuation funds typically would have around 1.5 to 2% of fees, right? Say you have around 400,000 in your superannuation fund, so that's around $6,000 to $8,000 of fees. But if you have SMSF, that could be just around 2,500 in a year, so around 5,000 of savings. You want broader investment exposure. And also, there's no transparency in APRA fund. You don't know where they're investing. What if you are very passionate not to invest in companies that do tobacco or are not environment friendly? You don't have control in APRA superannuation fund, versus if in SMSF rather, you do have that control. Third one is specific investment. So Filipinos, we typically have that desire, right, to invest in property. So one is there's perceived strength in the property market because it's brick and mortar. You can see the house, right, that you invest versus you don't really. It's not really tangible. The stocks, those other assets. And of course, we all live in a house. Some of you will have the home that you own, right? So you have that experience around owning a house as well as your investment property. And if you hear your friends, your family doing investments, then sometimes we have that fear of being locked out of property market. And sometimes if you already have a number of properties in your assets, if you can no longer borrow from the bank, some might consider why not using their superannuation fund for that investment. And of course, it's not only property, right, that you can invest. If you have an SMSF, you can also invest in collectibles and in cryptocurrency as well as bullion. So more flexibility in there. The fourth one is that it's just easier, it just makes it easier to share your wealth with your children and grandchildren because you can just add your older children or grandchildren as into your SMSF so they can help you manage that as well. Just easier to pass on the wealth to the family. So that's another reason as well. And now they have increased the limit to the number of directors. So you can have six directors in an SMSF. So it can be the couple and their children as well. Cool. Ram, over to you.
Okay, thanks, Joy. So you decided to set up an SMSF. The first question is who can be a member of an SMSF. So some people set up an SMSF with their spouse or kids. Some set up an SMSF with their friends as well, which is actually the requirement of the law is that all members must also be a trustee. That's the requirement. SMSF is not a separate entity, including your APRA regulated fund like Australian Super or your HESTA. It's a separate entity that is a trust, which is the trustee will look after or hold your fund for the benefit of the beneficiary in the future. So so all of the members, for example, your friends or your kids must be a trustee of the fund. So they will be responsible for the benefit of the members or the beneficiary. SMSF can be set up with individual trustee and can be set up as well with a corporate trustee. If you decided to set up an SMSF with a corporate trustee, meaning you will set up a company, which is a PTY or a PTY limited, all of the member must also be a director. And from July 2021, it's quite new law because of big family members actually are becoming bigger in Australia. So SMSF can have 6 trustees and members. Another requirement becoming a member of SMSF, so members cannot be a registered bankrupt, disqualified person, meaning those person who is being charged with dishonesty, or nor have employer relationship with other member, meaning you cannot set up SMSF. For example, I own the TaxSmart Cafe. I cannot set up SMSF with my employee, with my staff. For young people, they can actually be a member of an SMSF provided they are represented by their parents or guardian. Number 2, what's the advantage? Why, aside from the advantage mentioned by Joy a while ago, a lot of people set up SMSF because of a tax benefit. It's like your upper regulated fund. It's being taxed 15% only. And the favorite investment of SMSF is property, which is subject to capital gains tax. In Australia, we don't actually have a special rate for capital gains tax. It will be the gain in your property is being taxed based on your marginal tax rate. So if you are a high income earner, you will be in the 45 plus 2% Medicare levy, around 47% tax bracket. And if you have like a capital gain in your property or in your investment property, assuming it's a 500,000 gain, you will be taxed at 47%. Some investors put it in their superannuation via self-managed super fund. So instead of 47% tax, you will only be taxed 15%. And the good thing about SMSF as well, it's tax free by the time you reach 6 years old and retired. So to explain it by example, assuming that Pedro purchased 500,000 property, and then after 20 years, it becomes 2 million. So if Pedro put it into his personal name, the 1.5 500 to 1, the 1.5 million will be subject to capital gains tax, although there's like 50% CGT discount. But the 750,000 will be taxed based on his marginal tax rate when Pedro sell that investment property. So Pedro, as Plan B, purchased that investment property and put that in a self-managed super fund. So when Pedro sell that property, instead of capital gains tax at a 47%, assuming that Pedro is on a high marginal tax rate, it's only taxed at 10% before retirement. And then when Pedro retires, assuming that he sell that property during retirement, that is actually tax free. So that's why SMSF is so popular with regards to that. And then the timing as well, because you have control with your SMSF, you can contribute concessional, non-concessional contributions within your control. SMSF under pension are tax free as well. So the funds, when you are already retired, the funds in or the investments where SMSF is invested is also tax free with regards to that income. Another advantage is control on investments. So with the APRA regulated fund, like your Asalan Super or HESTA, it is actually invested in a stock market. So if you don't choose your investment, by default, Australian Super or HESTA or Rest Super will put your money into a balance fund, meaning it's like 70% growth asset and 30% defensive asset. When you set up an SMSF, you can control what kind of investments. Some investors prefer ASX 200 or individual shares instead of a managed fund. And then some investors actually, or in the SMSF, you cannot do an investment property within your APRA regulated fund. You can only purchase direct property via self-managed super fund. We love property. We already purchased our some of us or majority who attended this event already purchased a PPR, an investment property, and you have an experience that your property always double in 10 years. So a lot of people set up SMSF believes that they can outperform their superannuation that being managed by the fund manager. SMSF is power as well to business owners because some of them may use their SMSF money to purchase their business premises and lease that to their business. So, for example, Rom owns an accounting firm. I can set up my own SMSF, buy a commercial property, and rent it out to TaxSmart, and that's actually allowed instead of renting an office and pay the rent to the owner. SMSF is it's very competitive in terms of cost if your balance of your SMSF is high. So for a 200,000 superannuation fund, the actually the investment fee ranges from 2 to 3% in the upper regulated fund. So the 200,000 for the husband, approximately is paying 4 or 5,000 in fees, administration fee and investment fee, assuming that the wife have the same balance as well. So combined, they will be paying an investment and administration fee for around 10,000. So when they set up an SMSF, because they combine the two funds into a single fund, they will only pay their accountant to lodge the tax return, to prepare the financial statement, and they can reduce the fee dramatically by close to the SMSF fee now is around 2,500 to 3,000. So imagine from 10,000, they can reduce that to 3,000. So a savings of 7,000 every year. Estate planning strategies. SMSF is a good structure to transfer wealth from one generation to the next generation. And then the asset protection, because it is a trust, it's not owned by SMSF. It's out of reach from the creditor. So a lot of business owners, professionals with with a lot of risk, meaning like doctors, lawyers, they set up SMSF and put their asset or their wealth inside self-managed super funds so that it will out of reach if there's like a case filed against them. So that's the strategy why people, that's the advantage of having an SMSF. Number three, the disadvantage of having an SMSF or the drawbacks of having SMSF. I mentioned a while ago that you will be the trustee of your own money. So you need to invest on knowledge, the time, and cost as well. You need to do your own research with regards to your investment. You have to do a strategy. You have to comply with the SMSF rules. SMSF is being regulated by ATO, so you need to comply with taxation rules as well. So you have to invest on knowledge as well as it's time consuming. So this is the research coming from ASIC. So for SMSF, ASIC mentioned that you need at least 8 hours per month to run your own fund. And it's costly if you let your accountants do all the bookkeepings. It's also expensive to hire a buyer's advocate if you don't do your own research to buy a property. It's also expensive to hire a fund managers if you want to invest in stocks. So so you need to be an experienced investor to set up your own SMSF. The cost as well is high if the balance is low. For example, for a 20,000 superannuation balance, your fee, if you are inside your Australian super, the fee I think could be like $100 per year. So if you set up to your SMSF with 20,000 balance, you will pay your accountant around 2,500. So it's very, very expensive. Higher insurance cost. Your APRA regulated fund, you have an insurance inside your Australian super, your HESTA. Those are APRA regulated fund, and that is a group cover, meaning Australian super has more than 1 million member. They have a luxury of negotiating from the insurance company and give you a group cover for life insurance and total permanent disability. If you set up your own SMSF, it could be expensive because you will just be talking to an insurance company and just insure yourself. So it's becoming expensive. It's for SMSF. But the good thing about SMSF and getting their personal insurance is you will have like fully underwritten policy, and you can get an insurance, although it's expensive, but you can get an insurance that is applicable to your own personality, meaning It's fully underwritten. They will ask about your health situation, and you can get a good cover as compared to the group cover under your APRA regulated fund. So how SMSF is regulated? The HESTA, the Australian Super, is being regulated by APRA. So SMSF, as I mentioned a while ago, is being regulated by ATO. This is Australian Taxation Office. And if you have a corporate trustee as a trustee of your fund, you will also be regulated by Australian Securities and Investment Commission. There's a big penalty as well for non-compliance. If you violate SMSF law, you will lose 15% concession. So meaning you tax on the top marginal tax rate, meaning it's around 47%. So it's not 47% of the profit, but 47% of the balance. So meaning if you violate SMSF rules, for example, you set up SMSF and you get the money and you pay your own principal place of residence, you will lose the 15% tax concession, but you will be penalized as well for 47%. So meaning almost half of your SF balance will be lost for penalty. You will also be disqualified. You cannot set up another SMSF in the future, and there's a fine as well or imprisonment if you violate SMSF rules. So it's a highly regulated industry. Number 5, what's the difference between my SMSF versus my HESTA? SMSF members are trustees of your own SMSF. I already discussed this one, so you will be responsible with your own superannuation. With there's a company that manages your own fund. SMSF, it's limited in numbers, up to 6, starting 2021. Or your APRA regulated fund, it could be 1 million. So the biggest super fund is Australian Super, so it's more than 1 million members. SMSF trustee will develop your own investment strategy and make your investment decision. So you will be responsible. This is your own money. So our government allows that you will handle and invest that money. So you have to develop your investment strategy and make an investment decision. SMSF are regulated by ATO and ASIC. I already discussed that. The big disadvantage of SMSF are SMSF has no access to superannuation and complaints tribunal. If you entered into the contract and you lose your money, you will go into a regular court instead of a superannuation and complaints tribunal. Number 6. So how to set up SMSF correctly? Number 1, you have to choose your members. So it could be your husband or wife. 2 persons can set up SMSF. Actually, 1 person can set up SMSF, but the requirement is you need to set up a corporate trustee. So you will be the director, set up a corporate trustee, and then you can run the SMSF. Choose your SMSF structure. So it could be an individual trustee, but supposed to be its husband and wife. So 1 person cannot set an SMSF as an individual trustee. So director's ID is also a requirement when you set up a company. Create an SMSF trust deed. So trust deed is the law that govern an SMSF. So you have to, although accountants can